Welcome to ETF Market Insights, the ultimate destination for Canadian DIY investors eager for the latest on ETFs and the economy. Join us every week for timely insights and actionable strategies, all brought to you by BMO ETFs and our experienced panelists. Don't forget to subscribe, and let's jump right into today's episode.
Asset allocation ETFs have quickly become the go-to investment for Canadians, gathering over $40 billion in assets under management as of December 2025. These ETFs are marketed as simple, easy-to-use investment strategies, offering a diversified portfolio in an all-in-one ETF wrapper. But with over 90 all-in-one ETFs trading in Canada today, what might not be so simple is choosing the right one that's the best fit for your portfolio and investment objectives. I'm Danielle Nezel with BMO ETFs, and here today to share some insight on how BMO's all-in-one ETFs stand out from this crowded environment is Alain Desbiens, Vice Chair of BMO ETFs. Alain, it's so great to have you on the channel today.
Hello, Danielle. Thanks for welcoming me.
As a quick reminder, Alain and I will not be providing any investment advice or investment recommendations today. We will not be providing any tax advice. Today's show and all our shows are about investment education for do-it-yourself investors. Alain, let's get started. Maybe just give a little refresh to the audience who might be still learning about what asset allocation ETFs are. Can you give us an update on the flows to these ETFs in Canada, and why are they just such a popular type of ETF for investors?
Great question. First, Danielle, the ETF industry so far has its best year ever. Year to date, the industry had more than $100 billion of net sales, and the industry passed, an important milestone with $700 billion of asset under administration. The month of November was the best month ever in terms of net sales, and multi-asset class were basically 10% of all the net asset, in Canada. One of the reasons why it's growing so much in the ETF world is the ETF industry is in catch-up mode. Asset allocation and balance fund represent only 6% of the ETF industry. There's more than $1 trillion, Danielle, or 40% of all the mutual fund industry in balance and asset allocation. So there's a lot of room to grow for asset allocation ETF in Canada. As an example, because we've got the latest CIMA data as of the end of October 2025, the year-to-date net sales in the balance category for ETF is $8.5 billion, and the year-to-date net sales as of October 2025 in the balance mutual fund space is $1 billion. So we see that the industry, is catching up on asset allocation ETF. What does help also is all the education that you do on the space, the commission-free trading at discount brokers, investors' education around indexing, innovation, asset allocation based on core, broad, low-cost index fund, and model portfolios are really engine of growth for asset allocation ETF and makes them so popular. But let's not forget the basic, Danielle. ETF asset allocation are easy, simple to buy, and it works. There's a lot of benefits and value add in an asset allocation ETF. A couple, simplified investing, broad diversification, professionally constructed, automatic rebalancing, transparency, liquid, low cost, all in one cost structure. So this is a couple of the benefits and value add of the asset allocation ETF.
Thanks for going over all those benefits. I know so many investors out there have already figured this out. One of their favorite things about asset allocation ETFs, as you mentioned, Alain, is their low fees. They're very low cost products, lower fees than most of the average MER and ETFs out there on the market here in Canada. At BMO, we're aware of this. We know investors are looking for low-fee products, are looking to cut costs all across the spectrum in their lives, which is hard to do in an inflationary environment. So what we did at BMO, Alain, I know we love talking about this. We recently lowered our fees on most of our asset allocation ETFs, just passing back more performance to the investor. I say just more money in their jeans. Alain, when an investor is looking at different asset allocation ETFs, how can they compare fees on these different products?
So, you're right to pinpoint this. BMO did lower its fees on asset allocation ETF in June 2025. We've reduced our management fee to 15 beeps. So the fees of ZCon, ZBAL, ZGROW, and its ZEQT were reduced from 20 beeps to 15 beeps. That's a 25% fee reduction. Our fees, Daniels, are cheaper than all the major ETF and mutual fund players in the same balance category in Canada. And you know what? We did it before, and we're still cheaper with a management fee of 15 beeps. ZCon and ZBAL are what we call in the global neutral balance category. Morningstar did recently a great 2025 Canadian fund study. There's a lot of, great information inside of that document. But what is interesting is they're giving us the active fees per asset allocation and balance fund per percentile. So recently, Morningstar did a 2025 Canadian fund study to give a more comprehensive look at the investment fund fees in Canada. When I'm looking at the category of ZCon and ZBAL, the global neutral balance, the median fees in Canada is at 0.98. So at 0.15, ZCon, ZBAL are in the fifth lowest percentiles of fees in Canada in the $1 trillion plus mutual fund and ETF categories. The same for ZGROW that is inside of the global equity balance category. Again, there, the median fee in Canada is at 1.08. Again, ZGROW is in the fifth lowest fees in the category, and it's the same for ZEQT that is in the Canadian Fund Global Equity. So this is kind of important. And, before the podcast today, Danielle, and I've asked you the permission to do this, can I mention your age?
Yes, I'm 39 years old.
You're so young. I'm 62. So, you know what? Like all the investors listening to us today, lower fees can help you reach your goals sooner in accumulation and deaccumulation. So let's say we take your example, Danielle. You're 39. So if you're meeting, your financial planner, they're going to do a plan not with a 50% survival rate, which would be 95 years old, but they would do it with a 25% survival rate table that is 98 years old. So in your case, this is incredible. You've got 49 years old of time horizon of accumulation and deaccumulation in front of you. I'm a young baby boomer. I'm 62 years old. So basically at 62 years old, if I have a plan with a financial planner, and they use what we call, the probability of survival rate of 25%. This is the good practice. They're going to do a plan for me with a 36 years time horizon. This is important because lower fees can help you reach your goals sooner in the accumulation phase. So paying less fees adds up. And also, Danielle, in the deaccumulation phase, where savings last longer with lower fees.
Thanks for that, Alain. It is very powerful to know that the lower fees just help investors reach their financial goals quicker and build wealth faster. So really meaningful impact on that fee drop. We also did something interesting and exciting with our asset allocation ETFs, Alain. We recently added discount bonds with the ETF ZDB to the fixed income allocation of our asset allocation ETFs. This is an exciting thing for anyone holding these ETFs in non-registered or taxable accounts. Alain, what can you tell us? What benefits do discount bonds have for investors?
Well, the first thing, 2/3 of the investment in Canada is non-registered. so it is taxable. So minimizing the tax impact with a discount-bound ETF like ZDB is really helpful for Canadian in asset allocation and in deaccumulation and in accumulation phase. So BMO discount bond ETF invest in bonds where the current yield is near or below par value, having the coupon and yield to maturity aligned. That provides investors with, we would say, fair taxation. Why did we use ZDB particularly? Because it has the yield to maturity, the duration, and sector characteristics designed to approximate the Canadian aggregate universe. And this is really what we want to do on the Canadian fixed income side inside of our asset allocation ETF.
Thanks, Alain. So basically what we did, we took ZAG, which is the Canadian Aggregate Bond ETF. We replaced it with ZDB. So same exposure, matching exposures, as you said, but more discount bonds for investors, which pay out more capital gains than income. So something to think about and consider for those using these products in taxable accounts. Alain, we also offer on our asset allocation ETFs, we call these .Ts. And this is because on some of the tickers, you'll see the ticker, for example, ZGROW with a .T after it. Can you educate us on what the .T means and how it can be a good feature for someone looking for monthly cash flows?
Yes, and it goes with, my demography, which is the baby boomers. So basically what we did, Danielle, is we've brought T-Unit ETF to the market on two of our asset allocation ETF, ZBAL and ZGROW. And we've launched those T-Unit ETF because they can meet the needs of retirees that are transitioning from accumulation to deaccumulation. This is really important because, as you know, demography is changing in Canada. Just in 2023, the Labor Force Survey estimates that by 2025, at the time, the numbers of people 65 and plus would grow 1 million people. And based on current participation rates, nearly 900,000 workers have left their job between 2023 and 2025. So there's more and more people going in their deaccumulation phase. When you look at the current ZBAL and ZGROW, their distribution yield is around 2% and 1.7% after fees. So really, ZBAL.T and ZGROW.T are designed for investors looking for a consistent cash flow higher than 2 or 1.7%. And in the case of our T, this is a cash flow of 6%. This is annualized and this is paid monthly. Just as a reminder, what is a T-Series exchange-traded funds? So T-Series ETF are designed to provide a higher, predictable, and potentially more tax-efficient cash flow. This is similar to a T-Series mutual funds. The T-Series ETF will pay a fixed annual distribution rate, monthly based on the end-of-the-year NAV, and will pay out return of capital above the portfolio's yield less expense. Really important, this should not be construed as tax advice, as each investor's situation is different. Please always consult your tax advisors.
Thanks, Alain. So paying out a little more than what the portfolio yields. Typically, I think ZGROW and ZBAL yield around 2.5% to 3%. So just
right now, it's 2% for balance and 1.7% for
ZGROW. So there you go. So then really designed for those investors in their decumulation phase, paying out a little bit extra each month. Along with so many asset allocation ETFs on the market, I think I mentioned there's about 90, which when I looked that up in the National Bank report, I was shocked, but also it makes sense because these really resonate with investors, these products. So with all these products on the market, why should investors look to BMO asset allocation ETFs? What makes BMO ETFs different?
First, I think you want to have a solid ETF providers, helping you with asset allocation ETF. BMO ETF is the second largest ETF provider in Canada. We have more than $160 billion of AUM. We've done a lot of firsts. We have more than 50 tickers with a 10-year track records, more than 30 tickers over $1 billion. So a lot of award-winning, exchange-traded funds. So This is really important that you've got a key providers, to assist you on the asset allocation. Specifically for BMO's ETF asset allocation, I think we've tried, early to do all-in-one simplified investing, tracking indices like the S&P, MSCI, and FTSE inside of our asset allocation. And we're using some of the largest and most liquid index ETF in Canada. A couple of examples in ZCon, ZBAL, ZGRO, ZEQT. We're using ZSP that has more than $17 billion of AUM, ZAG that has $11 billion of AUM, ZDB that has more than $1 billion of AUM, ZCN, our BMO S&P tax composite index that has more than $10 billion of AUM, ZEA, our BMO MSCI EFI index ETF that has more than $10 billion of AUM, and ZEM, our BMO MSCI Emerging Market Index ETF that has more than $1 billion of AUM. So this is important. The underlying inside of the BMO asset allocation ETF, those ETF that were used are part of the top 50 biggest ETF in Canada. This is really key for a lot of investors. Also, performance. Our BMO Conservative ETF ZCon, our BMO Balance ETF ZBAL, our BMO Grow ETF ZGRO, ZEQT are all 4- and 5-star Morningstar rated. So this is important. Low fee, innovation, using core, broad, liquid, big AUM exchange traded funds, great performance, good Morningstar rating. So why use BMO? Well, we've reduced our fee before everyone at 50 beeps. This was done in June 2025. The fees of ZCon, ZBAL, ZGRO, and ZEQT were reduced then from 20 beeps to 15 beeps. That's, Danielle, a 25% fee reduction. Our fees are cheaper than all the major ETF and mutual fund players in Canada. And I repeat it, we did it before, and we're still cheaper with a management fee of 15 beeps. Danielle, BMO asset allocation ETF, really made investing easier. We did a lot in terms of first in innovation. I'm thinking about our ZESG. Our T-Series, we're still the only one in the Canadian marketplace to offer this on the ETF, landscape. We've reduced our management fee before at 15 beeps. And we've done also ETF stock splits. This was all designed for accumulation and deaccumulation need of investors. So this is a couple of the key benefits that we bring on the table.
Thanks, Alain. So that operational stability, our track record, the performance, really, we didn't talk a lot today about index investing, but that's essentially what these ETFs are at BMO. We use the index approach, and you look up the SPIVA reports. Index investing has performance that's persistent. So a lot of good things to look at when you're looking at BMO: the lower fees, the addition of the discount bonds, and of course the .Ts for income for those who are entering a decumulation phase. Alain, it was so great to have you on the channel and talk about asset allocation ETFs with you. Thanks so much for joining us.
Thank you, Danielle, for the invitation.
That's it for us today. We hope you enjoyed the show, and we'll see you next week.
Thank you for tuning in to this week's episode of ETF Market Insights. Don't forget to hit that subscribe button and sign up for alerts so you never miss our latest content. For more insights and to keep the conversation going, visit us at etfmarketinsights.com. Join our mailing list and explore a wealth of resources and tools designed just for ETF investors. Until next time, stay informed and empowered in your investing journey. This session is for informational purposes only. Any reference to a particular company or product is for illustrative purposes only and should not be considered as investment advice or a recommendation to buy or sell. Particular investment and/or trading strategies should be evaluated relative to the individual's investment objectives, and professional advice should be obtained with respect to your unique circumstances.